Learn how to protect your assets. Roger and David have put together a video you simply must see. Log on to protectmywealth.org. That's www.protectmywealth.org. Learn how to protect your assets today. Log on to protectmywealth.org.
Hi, David Reyes here again. And one thing I haven't mentioned today, normally with every show, I offer a complimentary second opinion, which, believe me, it's a great deal. It's free. How about that deal? And what I usually do for the first 5 callers that call in, you're also getting a copy of my book with Stephen Forbes called Successonomics. Great book, great read. There's about 30 advisors in it, plus Steve Forbes. So for the first 5 callers, I give that out at your appointment. So if you'd like to call in, it's 1-800-611-1967. Again, it's 1-800-611-1967, or reach us on the web at reyesplan.com. That's R-E-Y-E-S plan.com. I want to get now back to Roger, and this has been so much fun, Roger. You know, it's exactly what I wanted. I wanted your great knowledge and my expertise to kind of come together.
I love talking to you because I learn something. Every time I talk to you, I learn something about this whole complicated financial world.
Well, I'm happy.
I have a handle on the political world, but you've got the financial world.
And you teach me on your end. So we were talking about bonds before, and I think we covered that pretty well. Yep. The bottom line with bonds is it's a risky asset class.
Right now.
In part of the second opinion I offer, I look at bonds all the time. There's solutions to that, so we can still get yield and return, but not have the risk. So that's one of my big concerns.
And that's what people are looking for: is less risk, less complications,
absolutely,
and more return.
Absolutely,
because they're facing the uncertain world of retirement and how much is this thing going to cost 10 years from now? Have I saved enough? Have I invested enough? Am I getting enough? We talked about pensions too.
Yes.
And the real liabilities there. But to get back to where those pensions are invested, let's talk the stock market, because I'll tell you, there's a lot of people saying we have to be at the top of this 6-year bull market. China's showing some signs of weakness with the Shanghai thing. Market there had to be propped up by the government.
Oh, they're doing all kinds of things. So yeah, I can speak to that, and that's why you're here, because I have to deal with this kind of stuff every day, and you do too, right? China, Greece, the things we've talked about.
So
let's talk about China a little bit, okay? And China, you know, they're interesting. You know, their growth, their GDP 10 years ago, do you know what it was, Roger?
A lot lower than it is today.
No, it was higher. It was
really?
Their GDP was 15.
Really?
That was their growth rate. They were growing at
15% growth.
15% growth. That was their GDP. They're under 7 now, about 6, and they lie about everything.
Of course, we're 2.
Well, I understand, but when you're trying to expand economy and you put as much money, you put it, and you have these ghost towns of skyscrapers as you've seen on 60 Minutes, right?
Right.
You know, they're on a razor's edge of going into recession. In fact, in their stock market, they have halted selling of certain stocks. They've halted short selling of stocks. So their market right now is in big trouble. Okay, they've gone up 8. The Shanghai, which is the non-local market, has gone up 80% in the last year, right? And the problem is institutions are not invested; it's all local. Okay, so China is a problem. And it's just like Greece. There's since we're all interconnected now, which we thought was this great thing, right? Going back to the trade, the NAFTA deal, all the deals we've done with Mexico, and now we're trying to do a free trade agreement with the Europeans, right? That Obama did pass finally. Is that unfortunately, you know, it's like the butterfly effect, right? You know what that is, right?
Yeah, right.
You know, the butterfly effect. When the wings of a butterfly flap in the Amazon, it's going to affect us here in San Diego, which is a trip, but it's true.
Learn how to protect your assets. Roger and David have put together a video you simply must see. Log on to protectmywealth.org. That's www.protectmywealth.org. Learn how to protect your assets today. Log on to protectmywealth.org.
Let's kind of do a halftime report on the markets, right? And what's happening right now is, you know, our stock market is at the highest levels it's ever been, obviously. We're on the 6-year bull market. We're up 240%. Okay, we have price earnings ratios that are either the highest or second highest they've ever been. And we've had this all based upon the feds are really good at creating asset bubbles. They're really bad, as you've seen over the years, Roger, at bringing us kind of off that cliff, because it becomes a cliff, right? It becomes a bubble.
So are we in one?
We're totally in. There's not even a doubt. So we're in a bond bubble, which I think is a bigger bubble, as I said earlier, and we're in a stock market bubble. Now, it's going to depend upon, people, a lot of advisors say that, the increase in interest rates is already priced in the market. That's BS, okay? That's to keep people to still buy stocks.
Right.
Okay? We advise on stocks, we don't sell stocks. Big difference. So I just care about you as a client, so I'm not going to give this hyperbole. I'm going to say, look, I'm concerned about it, so how do we protect it? So right now, what's going to happen, there's going to be a triggering event. There always is. There's going to be something that tipping point that pushes us over. It could be Greece again. It could be Spain. It could be Portugal. It could be Iran. It could be the Chinese market crashing and then we crash. It could be lots of different things. But the bottom line is we haven't had a 10% correction, Roger, in almost 4 years. The second longest time ever.
So now you're scaring me.
I don't want to scare you.
So here's a lot of people, whether you're invested directly or through your pension plan or what company plan, whatever you have, 401k, you're in stocks and you've had a great ride.
Yep.
And if you're telling me that's all coming to an end, how do I protect myself?
Well, there's a couple ways. So we'll say the A word again, annuities, okay? There's certain annuities, and we're a fiduciary, so we
don't sell those either.
We use annuities.
Yep.
We use them very precise for a reason. We're not sellers of annuities. There's a big difference, right? I'm not an insurance agent for MetLife and I sell annuities. But we use them sparingly for certain situations. One of the things you can do is lock in your gain. Yeah. So let's just say you've made 200% in the last 6 years. There's annuities out there. You can actually protect your gain and still have market participation. Now, you're not going to get 100%. You might get 30, 40% of the market. You're not going to make even more than half the market. Market goes up 10, you might get 3 or 4. Market goes up 20, you might get 7 or 8. But the point is, if you're retired and you just want to protect your capital, these annuities also will allow you to take out 5 or 6% in income for the rest of your life. So now you've created a pension for yourself, right? The other more complex way that we use for the majority of our clients, quite honestly, is we actually, you have what I say, you have a home, right?
Yep.
And you have insurance on that house, I would imagine, right? And have you ever had a fire or catastrophe at your home?
No, and my fingers are crossed.
Yeah, mine are too. The last fire was right by our kids, and we had to evacuate. It was very scary. It was in Forest Ranch. The last one, we had the little one. It wasn't little, actually, it was big. But the reason I ask this is that you're going to keep paying that premium forever, right? You might not ever have a fire, but you're going to keep paying that insurance. Right. And why is that?
Because if I do have a fire, I want to be protected.
Because you don't want to be wiped out.
Right.
You don't have to write a check if you can or can't for $1 million, $500,000 for that house, right?
Right.
So we insure our homes, we insure our cars, we insure all these things. Why not insure our portfolios? What a concept. So what if I told you, Roger, there's a way that we actually can use a type of insurance, and I'm using these as analogies because they're not exact, but they're a form of insurance that we actually use. So let's say you can own IBM, Coca-Cola, a mutual fund, doesn't matter, stock type investments. What if I could put a floor underneath that for you? What if I could say, okay, Roger, in 2008, what if I told you that in a portfolio that we have that we lost 5%? That was 100% stock. Would that be okay with you?
Yeah, because
the market lost 37%.
Yeah, the market was down a lot.
Okay, so let's pretend you have $1 million. Let's make it real. Money's real. Percentages are like whatever that is. I have a big whiteboard in my office, as you've seen, right behind my desk, and that's because I'm dumb. I gotta draw things out and paint pictures. But the point is that there's ways that we can do that. And I want to finish up. We're coming up on another break. But I want to finish up on this topic and then talk about some other issues, other geopolitical issues. So again, here with Roger Hedgecock, this is David Reyes, AM 760, KFMB.
Learn how to protect your assets. Roger and David have put together a video you simply must see. Log on to protectmywealth.org. That's www.protectmywealth.org. Learn how to protect your assets today. Log on to protectmywealth.org.
Have you recently changed jobs and now you have a 401k or other retirement account you don't want to risk in the market? You've worked too hard to leave your retirement to chance. Since you'll probably start another retirement account at your new job, why not make sure nothing happens to your last one? David Reyes with Reyes Financial Architecture can help you roll over your retirement account from your previous employer and give you principal protection from market risk. Be confident of your plan. Call Reyes Financial Architecture now and ask about receiving a complimentary review. Don't leave anything to chance. Call David now.
800-611-1967. That's 800-611-1967.